Hello and welcome to ThinkScript Studies on Thinkorswim. My name is James Boyd. Michael Fairborn is out, not feeling well, and I am feeling great. So I'm going to actually teach the class today. I'm normally the person that's actually doing the chat, so I've moved over to teach, and Scott Thompson will be in the chat here today. And many of you know Scott. We welcome Scott. We'd also like to welcome Ocean Life, Will W., and many others. Welcome to all. Now, quick reminder, you could go to @JamesBoydCS. That is my handle on X. I'll show you that in just a moment of some resources that I have posted there. Now, just real quick also, as we get started, remember, now, we'll look at stocks, but we'll also look at options. Understand that equity index options carry a high level of risk, not suitable for all investors. So if you want to find out kind of what might be more suitable, we have what's called a paper money software application or web-based. Feel free to practice certain strategies and see if it's a strategy that you could consider for yourself. When we talk about scripts here today and examples, understand the information here is provided for general informational purposes only, not considered an individualized recommendation or personal investment advice. I don't just read that to read that, I literally mean that. Okay, so some of the examples we look at, you might say, that one doesn't interest me, but some other one might. Okay, so you're your own investor and you make your own decisions. But also remember that investing involves risk, including for some products, more than your initial investment. Now, what I'm going to do here today is let's go ahead here and take a quick look at what I want to do first is I want to look at markets first, okay? When I look at markets, I'm just going to talk about the equity indexes. And then what we're going to do is talk about scripts in general, okay? And we're going to talk about kind of some key scripts, and then we're going to talk about some examples from that. Now, first off, can anyone kind of tell me, I mean, here we are today. Is this kind of like the same old day, or is there something potentially a little different here? Now, what I'm going to do is just for a moment before we talk about scripts, that's where we are. Tell me what you see. Okay, now that 61.8% line, the line that we've been talking about for probably 2 weeks today, okay, I just did a video of this yesterday. This will be the first time we've actually opened and closed above it, if we can close here. Now, if you're a technician, you might say, hey, that's a shorter term higher high. Now, I don't think you're going to find any book on technical analysis that would say a shorter term higher high is viewed as bearish. Probably always one person that would say that or think that. But the fact is that's a shorter term higher high. Now, with trend, right? If you make a higher high, as Scott knows, maybe that stock might, or the index or whatever product we're looking at, it might try to make a higher low, to be continued. But that is actually kind of interesting because this is really getting above kind of a critical area here of that 54.50 we talked about. And if you look at this right here, this is the gap down area, right? There's the gap down. So really, if we're talking about why is today significant? Well, today's significant because we gap down to this level being 54.94, okay? And now, let's say hypothetically Monday or Tuesday, Wednesday, whatever, if it can go to the 55.78, it's actually not only got above the gap down level, but filled in the gap. Now, if you caught Kevin and I's class here today, you know that we talk quite a bit about gaps and filling in the gaps and W patterns and V patterns and things like that. Again, getting above the gap down level, some technicians might say that's not a bearish sign. That could be a potential bullish sign. If we fill the gap, is that a bearish sign or a potential bearish sign or a bullish sign? I think many investors might say, James, that's short-term bullish at that point in time. So we're kind of seeing if there are bears out there, these grizzly bears are turning into brown bears or brown bears or little panda bears, okay? Not really kind of seeing some of the ferocity of selling that we actually saw before, okay? Where are you, bears? Where are you now? Now, if we take a look at this, remember the VIX, okay, fresh note low. Now, it's not at 20, it's not at 18, just kind of dripping lower. You like to see the portfolio green and the VIX red. Some of you will get that in just a moment. But you know what I mean by that. So fresh new low there. Had a great discussion with Kevin on that today as well. Now the NASDAQ is probably the one that if we kind of talked about what might be leading the upside move, it's probably the NASDAQ, okay? You go back to where it gapped down on 4.3, the NASDAQ, so that's the day right there, 4.2 to 4.3, there's the gap down. We see on the NASDAQ, which, by the way, if we're talking about we want some leadership or the investor wants some leadership, many investors look for that leadership to come through the NASDAQ itself. And what you're going to notice is that's the first open and close we've actually had above that. If we close here, now we've actually closed that gap down area. And the comments that we made on the S&P is the same for the NASDAQ. Which one is leading? Well, which one has gone up the most? Which one has filled in the gap down? It's the NASDAQ, okay? Now, we talked about earlier this morning the Japanese yen fading, the Swiss franc fading. We talked about also the smaller caps also getting a little move. They've typically lagged. They're still lagging. But then also when you look at, let's say, what areas of the markets are actually getting a little push, it's not technology being soft. It's not discretionaries being soft or not participating. And it's not, for example, the $ IXC, which is the communication sector. You can't say that one's being soft either. So you have the NASDAQ leading, the VIX fading, technology, discretionaries, and communications all getting a little push, and let alone talking about some of the stuff we talked about this morning, okay? Now remember that class we actually did this morning at 9:30 a.m. Eastern, that is live only, so you want to make sure you're there, okay? So tell people if they're trying to meet with you next Friday, 9:30, say no, I'm going to that live class, and great discussions with Kevin. Now, so first off, any questions on the posture that we see here, okay? Now, the one thing we want to kind of say right here is, and I say this a lot, I feel like I say it too much, but nobody knows what's going to happen on Monday. Nobody knows what's going to happen on Friday. Nobody knows. But you could say that in any year. And the one thing I want to kind of say with that is the investor, many of them, are not just investing for what's going to happen potentially today or tomorrow. They're investing for the future, okay? So you need to understand that. When people invest, typically they're not investing for 24 hours. They're trying to buy businesses that could be making money and then might appreciate over time. It's a very important point. So I have never said, hey, let's try to forecast what's going to happen in the next 2 days. Don't know, okay? All right, now that we set the table, and now we can go to kind of talk about these scripts. So first off, I want to kind of show you where I just put these scripts, and what I'm going to do is let me just share this. Now, what I'm going to put right here, okay, in the chat, this is my X page, and you're going to see the handle, so at James Boyd CS. Notice capital J and capital B, okay? If anyone ever reaches out to you and say, this is James Boyd, just say, if you don't write back, but if you did, you might want to say, what's your dog's name? And if they don't say Jax, you know it's not me. I do not reach out, or we do not reach out to anyone, okay? The only thing we would do is if you posted something, we would reply to your post, but we don't reach out to you and solicit. So if someone does, it's not us. Now, if we scroll down a little bit, you're going to notice right at the very tippy top, I post those scripts. Now, for probably 7 years, I actually did the class on searches, okay? And historically, we had a website like Schwab.com, and we would actually kind of make some searches and talk about some technical fundamental criteria to find potential candidates, etc., to evaluate. Well, scripts is really another way to say search, okay? Now, I want to kind of talk about where we could actually use the scripts. Now, I'm going to kind of use the 2025 term as script as a way to search, as a way to scan, maybe from like your, when I say search, I'm talking about maybe you have a watch list already and you're searching for something, as you'll see in just a moment. You could also use it as a scan. Like you run a scan and you're using scripts to comb out things to make a watch list. But you could also use scripts as a way to kind of maybe just monitor a portfolio or just a list on the left-hand side. Let me show you what I mean by this, okay? So notice on the left-hand side, I just have indexes, I got sectors, And this right here, example given, we just have a script, and that script is called trend. So we could use the scripts on the left-hand side, sure, okay? And by the way, it can be more than one column. The second thing is, you're gonna notice, just like you would expect, is you could pull up a chart and use scripts, okay? Which this is an example of one. This is using the whole moving averages with a Kahoot script on the chart, okay? Now, you could also go to the Market Watch, which is when people think about scripts, they're probably really thinking about this. Fair. Now, if you also go to, let's say, the scan, we could, let's say, run a scan in anything and say, look, just give me the S&P 100, give me a stock greater than 40 over 500,000, and you get a list of stocks back, okay? You can take these column headings and you could add a script to it, or just put a script actually in the actual search, the scan criteria in general. So scans are very, I mean, you can use them almost anywhere, okay? Now, I want to kind of go back to something and kind of talk about some of the key points here in terms of scripts. Now, I would probably tell you, master these 7. Now, a lot of times we kind of focus on a lot of different stuff, but I want to kind of push back for just a second. Like, when I was first getting started, like, what do you focus on? Why does it matter? Why focus on certain things versus other things? What are the major things and what are the minor things? I want to talk about the major things for just a moment before we look at examples. So when we're talking about, let's say, looking for what are major scripts that the investor probably needs to master. Number one is scripts, okay, for stats. So when I talk about stats, I'm really talking about the percent change, which, by the way, that's not a script. That's just default. But definitely the week percent, okay, 1 week percent. But then for the 1 month percent, okay, and the year-to-date percent. Now, I want to kind of tell you what's the significance. When we look at the week percent, if someone says, I like bull flags, well, then you're going to be looking at the 1 week percent a lot, because the stocks that have the highest 1 week percent are probably the stocks that are candidates for bull flags. Because if you think about a flagpole, something that went up a lot, there's something that went up a lot in a short period of time, like 1 week. What's the significance of, let's say, 1 month? To look at trend, okay? Higher highs, higher lows over time, or the non-existence of that. If you have flat returns for the year, you probably don't have higher highs and higher lows. If you have stat returns, statistical returns that are negative, you probably don't have uptrends. I mean, come on, when you say it like that, we're like, geez, maybe we overcomplicate this stuff, okay? So when you look at, let's say, 1 month return, probably looking at, let's say, anything that's positive to show some type of trend. Type in the chat if you're with me. Now, when we talk about year-to-date returns, a lot of people like to kind of say, look, now year-to-date does not make a lot of sense if we're only 1 day into the year, 2 days into the year, and so on, because that doesn't probably mean trend. But once you start getting 1 month, 2 month, 3 month, 4 month into the year, then the year-to-date percentage is like 1 month. It's just kind of giving you more of an intermediate viewpoint, okay? Now, by the way, someone said, I want the 1 week, I want the 1 month, I want the year-to-date. Just go right to the X and steal the script, okay? Now, if what I'm going to do is I'm going to actually type in number 2. The second that I want you to master is the trend script. The trend script is, and this is what I hated, okay? Can I tell you what I don't like? Let me tell you what I don't like, okay? And Scott will actually know this as well. You ask 100 people what the trend is, you get about 100 different answers. Okay? Now, some people define things in a way, and something, if we even commit to even saying it's the same thing, higher highs and higher lows, you ask the same person what's the trend, sometimes they'll say something completely backwards to that, and they're basing it on their feelings. And then you got to ask yourself the question, are we doing technicals or is it feelings now? Am I a feeling-ishian, okay, or am I a technician? So the trend is actually looking at where the price is in relationship to the moving averages, and that trend right there is really based on a daily chart, okay? And let me just say this, it's the price relative to the 10-day EMA, the exponential moving average, and the 30-day SMA. Now, the nice thing about that is you can go right to the, when you grab this, you could right click on the column and there's actually right in the edit formula section, you could read a nice little description, if you will, of what do the numbers in the boxes mean. Now, the trend weekly is very important. Many of us might not be looking at the markets from a daily perspective. Now, when I say daily perspective, I just mean a 1 year daily chart. You might not be looking at the chart, maybe what happened in the last week or so. You might say, James, I'm a more intermediate investor. I'm looking at months to quarters to years, okay? That trend weekly that's what that's doing, is it's looking at a longer length of time, but it's the same idea as trend daily, okay? Now, the third one I kind of want us to really focus on, which we're going to show, is the relative strength. Now, I just put the RS for short, okay? So what you're going to notice up here, when you talk about relative strength can be different based upon the duration of time that you give it, okay? So if I said what's been strong, we would say what's been strong when, for how long, and compared to what? Well, so the 5 is 1 week, the 10 is 2 weeks, the RS21 is, in this case, 1 month. So if you said, James, I kind of really trade 2 to 3 days to 2 to 3 weeks, then you would probably be focusing on the RS5, 10, and 21. If you said, James, I'm more intermediate, then you're probably looking at something at least RS21, relative strength for 21 days, RS42 or 43, because you're more intermediate. Fine. Okay, think of this like a buffet. You get to choose if you want to eat it, but at the same time, what you might consider an eating. Okay, now, the fourth thing I want us to kind of master before we look at these examples, the fourth one is I want us to kind of focus on those bounce setups. Now, most of the time, not all the time, those bounce setups would be hold or CHE, close above the high low day or close higher gap. Now, what you're now going to notice is that hold is right there. Okay, now I'm looking at the indexes. Don't worry, we're going to look at actually the stocks in just a moment. But if someone says, I'm not really actually using scripts to see bounces, well, that hold is, for some technicians, one of the main setups they actually really look for. Now, breakouts could be in 3 different ways. A 20-day to the 20-day high, a 55-day high, or just the breakout, okay, column itself. Now, if someone said, well, what's the difference? I'm going to push back on that and say, why don't you, if I did the hard work to create it, then you do the easy work to at least read it. Fair? We got to meet in the middle. Because what I found is if I do all the work, or you do all the work, and then I want something for free, you want something for free, then we know we both don't really grow. So if I give you the breakout column script, then I want you to go to that breakout column script at the very top, right click on the heading, and then see what it's showing you. You should have an understanding of what those scripts are really showing and verifying it on the chart. Because remember, scripts are not guaranteed for accuracy or timing. That's why you want to have an understanding of what it is, and you can confirm it on the chart. Now, the last one I'm going to say, which many technicians really like, is also looking at the moving averages, the MAs. Now, the moving averages could also be 3 as well. I have labeled the 10-hole counter, HC for the hole counter, the 20-hole counter, and the MAX. Now, if I said the MAX, the moving average crossover, it could be an exponential moving average, it could be a simple, and which, by the way, is pretty easy to change. And this right here is the 10-hole counter. Why do we have the 10-hole counter? Well, the 10-hole moving average is the exponential moving average, right? It's even more weighted than the exponential. Okay, you got simple moving average, right? You got weighted moving average. You got the simple moving average, exponential moving average, weighted moving average, and then you got a whole moving average. That whole moving average is just even more sensitive to price movement, okay? Meaning the price and the moving average should be closer together. And that 10HC and the 20HC are just right there, and the MAX is right there. And the last one I really want to kind of bring out, many technicians, whether they're looking for bullish or bearish examples, they're probably using those flags. So if I was day one getting started today, today's my first day, okay? Well, I'll tell you what, the setups, bullish or bearish, are probably going to come through these 7 key scripts. Anything that actually comes, anything when someone says, I got a script for stochastics, CCI, RSI, all these different things, they are derivatives of these 7. Okay? They're like a reflection of the mirror. Here it's the mirror. And the other things are the reflection of what these 7 are. Okay? Now, any questions here? Now, the comment is the breakout scripts are not working the last 2 days. Please test in the watches. Yeah, let's go ahead and look. So what I'm going to do is, you got these 7 down. So if someone said, hey, now remember, this is education, okay? So with education, we're trying to say, what are some of the things we could focus on? What are they? How do they work? What are the pros and cons of them, right? Is this something we would consider, and so on? So what I want you to do is kind of practice with it, and let's kind of spend the rest of the time using these 7 things and kind of talking about, can we scrape out and rake out examples? Now, when we talk about a list, and when I first came to the company, they said, we're going to start with companies that are liquid. Well, the companies that are liquid tend to be in the Dow, the NASDAQ, and the S&P 100. That's why they're on the index. So I've never left that. I use that for all my classes, okay? So what you're now I'm just practicing what was taught and still taught, okay? Now, what I'm gonna do is I'm gonna go down to where it says indexes, and if you don't mind for just a moment, I'm gonna go to public, and I'm gonna go down to Dow Jones Industrial Average. Now, what you're now gonna notice is the comment from Thea, who is it? No, yeah, Thea, saying, hey, the breakout script doesn't work. I don't see that, at least on this. So now the breakout script, now remember when I kind of said, hey, I want you to read for yourself and meet me in the middle, okay? Right click, edit formula, and if I edit that formula, what you're now gonna see is there's a write-up on it, okay? So right click on the heading, okay? And I'm gonna send it to you. And what you're now going to see is it will tell us what is the script trying to really do, okay? Now, what you're going to notice is it also will tell us the input length of time, and it also shows what that script is. And if you said, hey, look, I want to actually have that, let me share that, and I'm going to put it right there, okay? Now, what I'm going to do is let's kind of talk about some of these things right now, and let's look and see if there's any potential opportunities. Now, if I said, James, if you told me, James, I'm a short-term investor, I want to use some of these 7 key scripts, what columns might I look for first? Well, remember, we like to always look at the trend column first, and if we're looking at the Dow Jones, this is going to really tell us something about sentiment. Now, what do I mean by that? Well, if we look at this trend column right there, and we see a lot of 3s, what is that telling us? What is it telling us? Well, if we got 3s, now remember, if you said, I don't know what that means, again, we could right-click on that column heading and say Edit Formula, and it's going to be a nice little write-up. And I'm telling you, probably you'd be done reading it in about 2 minutes, okay? Now, what I'm going to do is I'm going to share that with you. The reason why in our examples, in our classes that are educational nature, we like to look for things where that price is above a shorter-term moving average. That was one of the first things they actually taught me back in 2003, meaning we're looking for where the price is above a moving average. If that price is above a moving average, it could have momentum and it could have potential trend at that point in time. Okay? Now, if we got actually this, if we got 3, that's actually saying the price is above the 10 and the 30 period moving average. If we got a number of stocks that are in a number 2 condition, that means the price is more, a lot of these stocks are really starting to breach a diagonal level resistance, which means in the short term, they're probably making a higher high, and they could be setting up for flags. They're at least breakouts, but they could be setting up for flags. And if they start to bounce, they could actually come into potentially those 3s, which are more kind of examples of higher highs, higher lows. Now, I got a feeling that someone might say, well, James, could you show me what that looks like on the chart? I just really like to see that. So let me kind of just make sure we're all on the same page so we can see what that chart looks like, okay? Now, what I'm going to do is I'm going to just take something off just real quick. Let me go manual, put it back. Let me actually just go, let's go cat. Now, so when we talk about this blue line right there, that's the 10-day moving average, the exponential moving average. The red line, that's the 30-day simple moving average. So a trend 2, okay, and if you want this chart, I'll send this to you. This is just saying the price is above the 10-period moving average, the exponential moving average. The color of the candles match what is on the market watch. Okay, so let me share this chart with you. Okay, now here we go. Okay, now by the way, there is a survey. Thank you in advance for that. I'm going to come back to that, but let's just kind of hold that for just a second. So that's what it looks like on the chart. If we actually chose something that was like a trend 3, what does a trend 3 look like? Well, if I chose, let's say, trend 3, like a BA, for example, what does that look like on the chart? Let's show you, okay? Here's what BA looks like. Now, what you're going to notice is this was trend 2 for a while, okay? Was for a while. When did it go trend 3? Well, it went trend 3 when the price got above the 10 and the 30-day moving average. That's when it went trend 3, okay? Now, are there any questions with that? Now, this chart script I sent to you. Now, I'm going to take the MACD off. There it is, okay? And that's that chart right there. But this chart's really helpful because the color of the candles are matching what is on the market watch. Okay, now, let's kind of go back to something, okay? Now, what I want to do for just a moment is let's kind of talk about also, so trend is probably where someone starts. What are the type of trends we're seeing on the charts? Now, I'm going to also kind of notice, is there a correlation between stocks where you have relative strength? So if I click on the relative strength column heading and I look at what has been strong in, let's say, the 21 days, would we probably say that it's probably pretty likely that we're probably going to see some trends in at least a 2 or a 3? Yeah, you would think so. Especially if we're seeing stocks that are stronger than the S&P 500. And what you're going to notice is the stocks that, as I squared them, and I looked at what type of trends we actually have, the RS 5, 10, 21 is correlated to what the trends are doing. And we might say, well, duh, okay? Now, what you're now going to notice is back, as James has done to himself, is we'll also notice that the whole moving averages, they're green color. Exactly. Now, if we also start to see, let's say, some bounces or breakouts, could we also see some crossovers? Yeah, okay? So don't think that they're completely independent of each other. There's correlation to them, but there's just different ways to kind of come to the same ideas, okay? Now, can we do some examples right now? Are there any questions that you have, okay? Now, some of you are thinking, I feel really bad for the people that don't have scripts. That's your viewpoint. Other people might kind of find things the way they do. But scripts, the main purpose of them is to just kind of be really more efficient to try to find what you're trying to find or track what you're trying to track. Now, what I want to do is I want to pull up something that you might be thinking that we had some questions on yesterday. Like what? Well, yesterday we talked about the NASDAQ stocks. And so what I do is I have a NASDAQ list here, and I want to kind of look and see if there's anything in this list that might be kind of showing some bullish potential. Now, if someone said, well, James, I'm kind of thinking about, I would like to see a potential, let's say a stock. I like to trade like maybe a couple days, 2-3 days to 2-3 weeks. And I want something, let's say, that is in trend at least 2 to 3. Well, if we just click on that RS5, we can see what stocks have really been strong over this period of time. So this kind of becomes a shorter watch list. Now, whenever I say this, that they're green right now, okay? Now, if we take a look at this, some of the stocks we might look at also have bullish bounces like Colt or short-term highs, bullish bounce, short-term highs, bullish bounce, and so on, okay? Now, what I'm going to do is I'm also going to pick one. I'm going to go back to the example of Tesla, okay? The third one at the top. Now, why did you pick this one? Well, remember what we just did. We just said, hey, let's say we're trying to trade 2 to 3 days to 2 to 3 weeks. The stocks that are in that time frame that we're looking at that are showing green right now, we're wondering if it can keep going up, is right there. Now, we're not saying that these ones down here, they could be struggling and they could become stronger, but right now they're not. Does that make sense? So what I want to do is in our first trade example, let's go look at Tesla for just a moment, okay? Now, what I want to do is on Tesla, I want to actually also go ahead and pull up the chart. Let's type in TSLA. Now, the one thing I want to kind of show you just real quick is when Tesla was going down, the color of the candle, when you get this burgundy color candle, like the red color, it's just saying you were in trend number one. Trend number one for days on end. And if you're trend number one, that's where the price is below both moving averages. And as I've said before, and I'm going to say it again, if you get down below the moving averages, the path of least resistance is down. And the prediction, if someone were to say that, jokingly, is pain. Pain, pain, pain. Okay? Because you have negative momentum and trend. Now, fast forward to where we are now. If you look at where we are now, the stock, now, I'm not going to call this an oscillator for crying out loud, but what this does is it puts a dot down here at the bottom of what the trend was on at that point in time. Now, wait, now I'm kind of wondering, could you do this also on a weekly chart as well? Sure. If we go to that D for the day to the 3-year weekly, it's now just adjusting, okay, for this weekly chart. So sure, the answer is yes, okay? Now, what we're going to do is on our first trade example, we're going to look at Tesla doing a bullish sample trade, okay? So the purpose of really a script is you're trying to find a potential investment. You're trying to track maybe some current holdings, and you're trying to kind of monitor things. So we're going to kind of use the first purpose of the script. We're trying to find examples of potential bullish setups. Now in this, what I'm going to do is I'm going to right click on the chart, okay? I'm going to go to buy custom, and I'm going to go to with OCO bracket, okay? Now if we do that, we're going to right click, buy custom with OCO bracket, and then now what you're going to see is buying the shares of stock. We're going to go back to this and just put in the capital size that we've talked about. In our examples of buying shares of stock, it's about $6,000 to maybe $8,000. And what you're now going to notice is if we said, well, how many shares is that? The answer is 21 shares of stock. Now, if I were to ask you, calling all technicians, Scott, you're disqualified. Now, if I were to draw this at like a level of resistance, let me kind of give you a point of reference, okay? This is 280. If the price, if doesn't mean it did, if is still open for debate, and how it's going to play out. If it can get above the 281, what's the next potential resistance on the chart? Okay? Well, I mean, there's not a whole lot here. I mean, the stock fell down quite a bit, very steeply. The only spot that we actually really have on the chart where it made a low, the old low, okay, could be the new high. Okay? Now, let me repeat that. The old low could be the new potential high. That new potential high could be, over time, potential resistance. So some technicians who are not trading their feelings, and I'm telling you, there's so many people that trade their feelings. It's actually kind of funny when you press them a little bit, and they're like, yeah, okay, I'm trading my feelings. It's fun. Okay, here we go. Now, if we take a look at this, let's say the investor said, James, I see 327, okay? Chris B says 350. So Chris B, his area that he's looking for is right there, okay, right there. I'm even gonna go a little lower. Now I'm gonna put that mark here at, let's say, 325, okay? Now why did you do it a little short? Well, we like to kind of take the resistance less 1 or 2%, and if we do about 1%, it's gonna be right at 325, okay? Now, if the investor said, where do we see a potential support? It's probably going to be right around, let's say, 254. If I take 254 less 2%, it's going to be right at the level, I'll say 248.92. 248.92. Where did you get that? 248.92. Dated GTC for the target, dated GTC for the stop. Now, whenever you're learning something, whether it's, let's say, about options or stock investing fundamentals or technicals or scripts, kind of the point of it is to actually say, look, I'm going to apply what I'm actually learning in a Paper Money account and then practice. That's a part of the learning, okay? At least some of us think it is. And that's what the Paper Money account for. Practice, okay? And that way it penetrates your mind a little bit more of what you're learning, okay, in the Paper Money account. Now, got a target, got a stop underneath, confirm send, and just remember that stop is saying if it goes to that price or less, sell the stock. It's a trigger to sell. It's not saying it's going to sell exactly at that price, okay? Are there any comments on this? Yeah, Mark actually says, but now we need to have our technical analysis hat on. Well, by the way, no one actually says that you have to wear one hat, okay? That's why someone actually could learn different types of analysis to try to see if they're moving in harmony with each other and why sometimes they might not go together. Now, what I want to do is I want to kind of just take a quick look at the NASDAQ. Can anyone actually kind of tell me some of the stocks in the NASDAQ that are kind of standing out a little bit? When I say the NASDAQ, I just have a list right there on the left-hand side. Any stocks that are standing out to you of the list that I'm showing. Anything? Okay. Now, I just want to kind of just give you a moment to take a quick look at that. Okay. Now, as I kind of get some answers here, I also want to go back to, let's say, the second list for just a moment. And what I'm going to do is, this was the NASDAQ 100 broken down into half a list. And I'm also going to go to that I'm going to go to the NASDAQ 2 list, which is going to be right there. Okay. Let's kind of look and see if there's anything on that list and just kind of give it a moment. Now, yeah, well, so the first stock in there is Charter Communications. Yep. There's Tesla being number 2. MSTR, they're the company that, for example, we talked about on Tuesday that actually has, as of the end of March 31st of this year, they have a cash position in Bitcoin, $1.9 billion, okay? And by the way, Palantir had, at the end of March, $2.23 billion of their cash sitting in Bitcoin. Now, why do we talk about that? Well, because if that asset class goes to the upside and they're sitting on that asset and they sell some of those shares, okay, they might profit from that potentially, or just have higher balance sheet values than they did before. Guys and gals, I mean, this is where you want to kind of have an idea of what do these companies have on their balance sheets? What do they have exposure to? This is why we call it investing, okay? Investing is about income statements. Are they making money? Investing is about assets and liabilities and equity. What does the investor think we're doing, okay? It's not just buying things that are green and red, okay? Now, what I want to do is I want to go to the other list and kind of say, are there any other stocks here that we might take a look at? Now, what I want to do is, as we kind of take a look at the S&P 100, let's go to this for just a moment and see if there's any examples. Now, what I'm going to do is, if someone said, James, I want to kind of see a list of stocks that might be showing call hold. Well, the list of stocks that are showing that is Netflix again. There's Lockheed Martin, and there's Lilly. Now, that's if we're looking for a bullish bounce. If someone said, James, I would really like stocks that, for example, are doing, let's say, a moving average crossover, we could actually also categorize that as well, okay? Now, if we went down to the next list, I just want to kind of show you that, and I'm trying to also kind of just show what are some stocks that are coming up here. Now, what I also want to do is I want to go back and say, I want to focus on this MAX for just a moment. Notice the stocks that are showing a cross. Those are the ones that are doing the crossover today. The X+1 means the crossover happened a day ago. How do you know that? Right click on the heading, edit the formula, and what you're now going to notice is it's going to show you the whole moving average crossing a rising, okay, 20 whole moving average. okay? And that's the key word, rising, okay? And you're going to see that there's an X, means that's the signal day. X plus 1 happened a day ago, and then 2, and so on. It also does show right there, red is on the day of a negative crossover. All right, now let's go to work here, okay? Now what I want to do is I want to go back to the example of these top two. You got Amazon and Meta there. Let's pull up Meta for just a moment. Now, if we kind of looked and said on this chart, if we looked at Meta, it's trying to get above the downward sloping moving average, okay? That's Meta. If we pull up, let's say, Amazon, which one is actually kind of showing a little bit more strength or maybe leading the way a little bit? It's Amazon, okay? Now, I want to have a little fun with you. I don't want to ruin your weekend, but let's just say this were to happen. Let's say, I'm not trying to cause household volatility. I would never want to do something like that. But what if you told your spouse, stop buying Amazon stuff, okay? It's not Christmas, it's blasted April. Let me know how that turns out if your family uses it. It's not a recommendation. Now, what I'm going to do is we know that there's earnings upcoming, okay? We know that. And this is what's kind of interesting, what I want to kind of show you for just a moment, which is interesting in terms of a script, okay? One of the other ones that people like to use in terms of, let's say, a script that I did not include of the 7 is the IV, implied volatility percent, plus technicals. Now, many investors like to be buyers of options or sellers of options. The number in the box there just represents the IV percentile, which you can find on the trade tab. The light green box is just representing, okay, if I go to edit formula, if I actually click on that, slide that over, it gives us a nice little kind of readout what this is really trying to show before we look at our first example. The light green is actually showing us stocks that is within 1 to 3 days of the price above the MA, moving average, MACD, and stochastics. Now, how many of you always feel like you're late? Man, every time you see something, you're just late, okay? You don't have to be late, okay? So that light green means the price is above the moving average, the MACD is up, and the stochastics, okay? And so what you're now going to notice is what is the gray color, okay? Well, it's actually that gray, it's in the middle. It's really 1 to 2 days, okay? And what you're now going to notice is what's the red? Price is below, okay? So now what you're going to see is we can kind of use, and the goal of this here today is to kind of show you a script buffet. How do you use it in harmony with each other? Do not think that these are all individual. If we get a stock that's going up, the trend is probably going to be in a 3. The relative strength is probably going to be green. We're probably going to see bounces and breakouts and moving average crossovers, or probably going to be seeing flags and breakouts. So a lot of these are just kind of slight variations, but could also be showing confirmation of something you're trying to see. Now, for time's sake, what I'm going to do is I'm going to come in here to the Amazon, and what we're going to do is we're going to sell a put on this over the earnings. Now, in our example, we're going to go to the Junes as I wrap up here. I'm going to go to the Junes, and we're going to sell a strike, the 175, that really has a 27 delta. I'm going to go lower. Remember, the delta is the change in the option price or the change in the stock price. And that's just showing right now 27% chance the stock could be below the strike price at expiration. That number can change. Why are we doing it lower? Well, we're doing it lower because we're saying, hey, over earnings, the stock could be more volatile. So we're trying to give it more wiggle room if it were to go down. When we look at the break even and closing here, you're going to see the numbers for that trade. Now, what I want you to do is I want you to go out and kind of think about how you work with these scripts. What are your main 7 scripts that you use? Now, if you say, James, I don't know, that's why I came to the class. Well, feel free to practice with these 7 that we talked about here today. Go out and practice using those scripts to evaluate new positions and or existing ones. I want to say thanks to Scott Thompson for answering those questions in chat. There is also a survey in the chat. Just click on it, and there's only 2 questions, okay? Love to actually hear your feedback. Now, the one thing I want to kind of also make mention in closing, feel free to also go to the X page where you could actually, for example, see the other scripts. Any of the scripts that I talk about, I post right there. Also, just remember, you can go right to YouTube, and our channel is called Trader Talks Schwab Coaching Webcast. You can see all of our content outside ETFs right on that page. They were live classes that have also been recorded. I want to actually say happy Friday to you, and hopefully you actually have a nice weekend with you and your family. I want to also make mention, go out and practice what we talked about in the Paper Money Account, and we'll see you back on Monday. Feel free to check out our recordings on the weekend as well. With that said, this has been the Think Script Studies on Thinkorswim. Take care. Bye-bye.